Let me ask you something real quick. How many times have you drawn support and resistance, price touched it perfectly, and then boom, price sliced through it like the level never existed? Here's the truth most trading videos won't tell you. You didn't lose that trade because support failed. You lost it because you drew it wrong. Knowing what support and resistance is not the same thing as knowing how to draw the lines and zones correctly so you can actually execute winning trades. And that one difference, that's the line between traders who catch clean moves and traders who keep getting stopped out, even when their analysis looks perfect. In this video, I'll show you exactly how to draw support and resistance the right way using lines and zones, and I'll break down the 5 biggest mistakes silently killing your trades right now. So stick around because mistake number 5 is the reason most traders keep losing, even after years in the market. And without wasting time, I'm Rikia and you're welcome to my channel Trade with Raks, where we teach how to build wealth and gain financial freedom through trading and investing in financial market. So if you know you want to learn more trading tips, strategies, and get weekly market insights, make sure to subscribe and turn on the notification to get notified anytime I drop a new video so you don't miss out on any market update. And if you have any suggestions for future videos, drop them in the comments below because I'll be reading all of them. So without further ado, let's dive in. First, let's fix the biggest misunderstanding. Support and resistance are not magical lines. They are areas where buyers and sellers wrestled for control before. Support is an area where buyers step in, takes control and pushes price up, and resistance is an area where sellers took control and pushed price down. Buyers and sellers react at these levels, which often causes the market to change direction. Price doesn't respect your line. Price respects liquidity and orders around an area. So price moves towards the zones or areas where there is a large number of retail traders' orders, that is stop losses and pending entries. That is why sometimes price pierces your line and still reverses. And this brings us straight to mistake number 1. So mistake number 1 is drawing support and resistance like a laser line. New traders love thin lines, but the market hates them. Price rarely reacts at one exact price. It reacts within a zone. So when you draw a single thin line, every tiny wick looks like a breakout. And this easily traps traders because when you see the wick breakout, you panic and then enter trades early or get stopped out. So instead of drawing thin lines, draw zones. Use rectangles to cover the highs and the lows of the area where there is reaction. When you draw support and resistance zones, you give price breathing space, and this gives you clarity. Mistake number 2 is using too many support and resistance levels. If your chart looks like a spider web, then that's a problem. A messy chart would usually give confusion and lead to bad decisions. Not every bounce matters, and not every candle is important. What you should do is just focus on major swing highs and swing lows and the most recent ones. Ask yourself, will those big institutions, the smart money, will they care about this level? If price reacted there multiple times and caused a strong move, that level matters. Having clean chart helps you make clear decisions. And mistake number 3, this one is deadly, which is ignoring higher time frames and drawing levels only on lower time frames. Support on the 5-minute chart means nothing if resistance is right above it on the daily time frame. You want to see the same zone respected across time frames. So always start from the weekly or daily time frame. Support and resistance on a higher time frame gives you direction. These are the levels institutions are watching closely and indicates key zones for stronger reactions. Then move to the 4-hour or 1-hour time frame and then to the 15-minute or 5-minute time frame for entry. So the higher time frame levels give you direction for stronger reactions, while the lower time frame is for entries and gives you better precision. This is how smart traders align the market. Mistake number 4 is treating support and resistance like walls. When price reaches these levels, traders expect instant reversals. Support and resistance are not brick walls. Price can spike through and break out above or below key levels, grabbing liquidity from pending stop loss and entry orders, and end up being a false break. Or it consolidates for some time and then reverses. This is why confirmation matters. You must always wait for rejection wicks or strong engulfing candles or a break and retest at support and resistance. These are confirmation signals that indicate price might move in the opposite direction. Support and resistance show you where to watch and not when to enter blindly. And mistake number 5 is the mistake that destroys accounts, and that is ignoring trend and market structure. Drawing support and resistance without market context only results in losing trades. Support works best in uptrends because here, resistance breaks easily as price makes higher highs and higher lows, while resistance works best in downtrends because here, support fails as price makes lower highs and lower lows. In strong trends, levels break more than they hold. So if price is making higher highs and higher lows, stop shorting every resistance you see. And likewise, if price is making lower highs and lower lows, avoid taking long trades. Trend decides if a level holds or breaks. So always trade with structure, not against it. This one shift alone can change your win rate. Now let's put it all together step by step, how to draw support and resistance correctly. So the first step, step 1, is to start from the higher time frame, that is the weekly or daily time frame. Then step 2 is to mark major swing highs and lows. Mark the most recent ones. Step 3 is to draw zones and not thin lines. Step 4 is to align levels with trend. And step 5 is moving to the lower time frame for entries. Remember, always keep it simple, keep it clean, and wait for price to come to your level. Now, if this video saved you from just one bad trade, make sure you hit the like button and subscribe if you want clean, no hype trading education that actually works. Also, comment below if you use lines or zones and why. Thanks for watching, and I'll see you in the next video. Let's trade smarter.